we have understood the method, the format of calculating the capital gain. We have already learned the format of calculating the capital gain. The tax, the rate that we have to apply on gross long-term capital gain is not given in the chapter properly. You have to search, and while searching it will consume at least half an hour. I am saying at least. More it can take 1 or 2 hours also. Let's make your life simple. Long term capital gain will be charged directly at a flat rate of flat rate of 20% only on the amount of capital gain. Here is an interesting concept. I'll explain you. First, understand what is this. Long-term capital gain will be charged directly at a flat rate of 20% only on the amount of the capital gain. Only on the amount of capital gain. Now, it is for the long-term capital gain. There is short-term capital gain also. Short-term capital gain will be charged at the slab rate that I have taught you in the very first lecture. So how it is applicable, now let's see. The total taxable, I want you all to please note it down somewhere at the top of the page so that you can understand it. I advise you to make a box and write it. And what I am teaching right now, please listen it. I am teaching just a concept. The main thing is this. I hope you have copied down. Total taxable amount that we have computed after the income statement, from income from house property, income from business and profession, income from salary, income from capital gain, house property and other sources. Say the amount of the total taxable amount is say rupees 10 lakh. In 10 lakhs capital gain is that also long term capital gain is 2 lakhs. Short term capital gain is say rupees 3 lakhs, and the remaining is the other head's income, that is 5 lakhs. So how you will calculate the tax? You calculate this total taxable amount. After that, draw lines like this, how I have drawn. Draw a line like this and write capital gain. Make one line, write capital gain. After that, make a sub tree again, long term capital and short term capital. Now only 2 lakhs at the rate of 20%, that is equal to 40,000 tax amount. This both will be added 8 lakhs, and the slab rate will be applicable 2.525 lakhs at the rate 10%. 5 lakhs, I guess the slab rate has changed to 3 lakhs. Sorry, 3 lakhs to 5 lakhs at the rate of 10%. 5 lakhs to 10 lakhs at the rate of 20%. This is how the slab rate will be applicable for short-term capital gain. Short-term capital gain will be added in the total income, but the long-term capital gain will be brought separate, and 20% rate of flat rate will be applicable. So do you tell me, after calculating the total income, is it possible to directly calculate as per the slab or including the capital gain? The sum will entirely go wrong. This is a critical concept that I have taught you right now. Please, if you want, you can note it down how to do it, because when you will do further when you will practice the sums from the practice manual, you will not understand how it is suddenly capital gain coming this amount, suddenly the amount of capital gain is taken at the side and the rate is applicable at the rate of 20%, you will not understand how it is. It is very confusing in the practice manual. So to make your life easy, understand this, and after that read the practice manual sum, you will come to understand. And I advise you to please follow the practice manual format only, because the paper corrector may not know this format, how we have calculated. He may think you have done wrong. So for your understanding, you do this in the rough work, and after that do in fair the practice manual manner. I'm not teaching that format, because it is not the format that I follow. So you all do it. I'm not doing that. Now we'll discuss the rates for shares and securities. Shares and securities. I have told you shares and security, long-term capital asset if period of holding 1 year or equal to 1 year or more than 1 year. So how it will be the rates for the shares and securities, I'll teach you now. Equity shares and equity oriented funds, other securities means debentures and all, so don't consider that right now. Only equity related and equity oriented funds. You have already purchased this equity shares. Now at the time of sale, how you have earned a long-term capital gain or short-term capital gain, how it will be taxable, I'll teach you that. Transfer through recognized stock exchange, then long-term capital gain will be exempt under section 1038. Long-term capital gain on equity shares, if the equity shares are holded for a period of 1 year or more than 1 year, and after that they are sold and a capital gain is incurred, that is long-term capital gain is income, it is totally exempt. You are not needed to pay a single penny of tax on such long-term capital gain. But if you have earned a short-term capital gain only if such short-term capital gain is earned from transfer through recognized stock exchange. If such transfer is not done through recognized stock exchange, there is another side for that. I'll teach you that. It is only, this is a cumulative one, transfer through recognized stock exchange and earn the long-term capital gain, and only then such capital gain, long-term capital gain income will be exempt. If short-term capital gain is incurred through transfer through recognized stock exchange, then there is no exemption, but taxable under section 111A at the rate of 15%. See, 15%, it is not a slab rate, it is a flat rate of 15%. Similarly, how I thought over here, you have to do it in the same manner. You have to do this in the same manner. Now let's see transfer through non-recognized stock exchange. I'm writing here otherwise. You all please write transfer through non-recognized stock exchange. It's a humble request to write that. My time is constrained, that's why I am writing otherwise. Long-term capital gain, short-term capital gain, note 1, note 2, note 1 for long-term capital gain with indexation. You know, indexation comes only in long-term capital gain. Without indexation, you are leaving your indexation. So what benefit you are getting? Let's see. If you are taken indexation, then slab rate at the rate of 20% as we have learned over here. But if you are leaving your indexation, then slab rate at the rate of 10%. Note 2. Short-term capital gain. If it is owned by an individual or otherwise other than individual, if an individual, then what? Short-term capital gain, I've already taught you all, that is slab rate. But otherwise, flat rate at the rate of 30% on the short-term capital gain. Are you getting this? If on other securities also you have earned long-term capital gain, note 1. If short-term capital gain, note 2. So this is a different tangent. It is altogether a different concept. If equity shares have been purchased from a recognized stock exchange and they are transferred through also a recognized stock exchange, and after that you have earned a long-term capital gain, such a long format, then only such gain will be exempt under section 1038. But if short-term gain is incurred from such transaction through recognized stock exchange, then exemption is not given, but a flat rate of 15% is given. But otherwise, if not transferred through recognized stock exchange, long-term capital gain will be taxable as per the normal asset pattern at the rate of 20%. If it has taken indexation, but without indexation at the rate of 10%, a person will be fool if it is taking without indexation. You should take with indexation, even though it is 20% rate. My personal advice is to take with indexation, because in indexation you get a huge difference of amount. In cost of acquisition and cost of indexation, there are a huge difference. So you should always take with indexation. But if the question specifies you without indexation, then you take at the rate of 10%. But if short-term capital gain, if he is an individual, it will be calculated as per the slab rate. It will be added through the other incomes. But long-term capital gain will not be added to the other incomes. It will be bifurcated. It will be bifurcated. So please copy it down. I hope you have copied. So till now I've taught you all the total taxation of capital gain, the rate of taxation for the capital gain. Further I'll teach you more. Have patience.